Hello, potheads. Nick here, looking at CGC. Just kidding. Again, gotcha. Anyway, so let's put today. Today is 21st. Bad day on the market, but for a bad day, it was a good day. Nasdaq ended up closing green. The rotation between small caps, Nasdaq is still going on. The S&P bounced off the lows, closed on an upswing. So for a quote bad day, it wasn't so bad. We've had so many green candles that we forgot what red ones look like, right? So I had 100 different alerts, not 100 but dozens. I do a lot of homework and I put the alerts like this one, for example, and I used to have one down here, but it triggered for CGC. So it was a uh-oh moment, but if I look at this chart, so I have two things I can say about it. It's a must-hold level. So let's jump in, by the way. Technically speaking, the fundamentals are on you. You definitely know more than me about pot stocks, specifics of this one in its industry, if you do trade it actively, hopefully. And my knowledge is general, and I think that the biggest catalyst upwards will be legislative. It's ridiculous, absolutely ridiculous, that it's legal in states and on the federal level it's not. So they're basically criminals. How is this stock still performing on Wall Street is a miracle all by itself. So they do have a lot of challenges. So put in a little sprinkle of fairy dust as far as, hey, this could be the legislation rhetoric could kick up into the elections, but it might also fall if Trump gets reelected, because the status quo is not favoring the pot legalization trade, so to speak. So back to the technicals. Assuming that I don't have a catalyst down the line, just on the face of it, this chart needs a bounce. Otherwise, there'll be trouble. So it's starting to look like a neckline that needs to hold. So let's put some lines. I do have lines on it. So let's see where it was. I knew here it was tight. Support, what does that say? I'm having eye surgery tomorrow, so buy the dip. So I have a note to myself to buy the dip zone. It's a support zone. So it depends on my time frame. I could buy dips into it. Support zone, buy the dip also. But also, so it depends on, this is buy the dip 1, buy the dip 2. Not every dip is for everybody. So if I were to draw new lines, why do I draw lines? Because they give me actionable plans. So going forward, I see resistance, several failures up here, correct? So eventually I'm going to run out of space here, so I'm going to make it look wonky. They're going to go up, and they usually rally in two steps at least. They rally, and then they hit prior failure levels. So they can't just slice through them. This will unfold a little bit more tempered, but I'm going to leave it there for now. I don't have time to redraw it. All right. As far as the why should it hold, because if it doesn't, you have this going on. And notice I didn't surgically place it at the bottom of that candle, and I'm only going to do this because I don't foresee a major problem without a change in the thesis. So if it doesn't, the extent of the damage is about the height of the head. This is like a complex head and shoulders. You can see two shoulders here. I guess these are two shoulders. The neckline is not perfectly surgical. I'm sure somebody can draw it somehow. To me, it's how many knocks can the neckline take before it fails? Well, a lot, apparently. I see 4 or 5 already. And more importantly, even if it fails, there's a super strong, a well-consolidated zone just below it. So that's why I didn't zigzag it all the way down to its, ideal target would be, what is that? Let's say 1960 to, so about $3. So it should fall $3 from here. So $12. I don't think it gets there. This is COVID. You really think we're headed to COVID? Crash, panic, whatever you want to call it. This has never happened before. This closure of the whole globe has never happened before. Unless we decide to close the whole world again, which I don't see without a huge mutation in this virus. We cannot afford another closure. We cannot the government cannot pay for reinflating the world again. This one costs 5-10 trillion. I don't know. Trillion is a lot of money. It's a lot of money. It's a shit ton of money. So anyway, so even if it fails here, a hard bounce will be here. So let it fail, and I will sell put spreads into it all the way. If I own the stock, I wouldn't panic out of it knowing that there is a bottom below me, especially if I'm in it for the long term. You know what I mean? So if I have not panicked from here, this is not a place to exit until it's lost. And even then, the bottom is super near. So I'm agnostic as far as I don't have any bias because I don't have a trade on it. So I'm telling you the truth. I'm also telling you that rallying through here is not going to be easy. This is a daily chart, about a year's worth of data, and there's a ton of resistance along the way. Every neckline, every high volume spot is resistance. This level here in 1920 should be like a heavy roof over the head. This is the point of control. So what is that? It's volume profile speak. If you don't know that, this is probably worth looking into. It's a really good tool. It's my number 2 tool. My number 1 tool is my eyeballs and just the levels. Those you can find without anything. You can just take all the lines out and find the levels that matter. The second tool is the volume profile. These volume bars on here tell a story, but they don't tell me anything, except on that day they traded a lot. So it just doesn't, it tells me between here and here it traded a lot. The volume profile here on the left side, it's the same volume bars, only they tell me where they happened. So this tells me that 20 is really popular. 1990, that was a good year. Was it? Anyway, so yeah, I had a pretty good car then. It was a hot little Eagle Talon. I wish I had that one again. But anyway, so the bulls and the bears like to trade it a lot up here. So it just makes sense that if it's rallying into it, the imbalance of buyers and sellers will come back into look, because when the stock is rallying, you have more buyers than sellers. That's why it's rallying, and then it hits a place where they're both active. So the imbalance goes away, so it tapers. That's the way I like this rally into it. I could have shorted this. If I was doing this video up here, I'd say short it with a tight stop. So what is this? That's horrendous. What did I call supply? Yeah, they closed this gap and they said see ya, and they haven't come there yet. So eventually these will be triggers. So in fact, I will put say, hey, just pay attention here. And here I will say short it, tight stop, or before you get upset, chase the breakout. So if you don't short it, you can chase the breakout from it, because that means there's something good going on and there's resistance here and here. But dips, I think, are buyable. In fact, I'm going to reset this trigger that just fired wherever it was. Is this it? No, I don't know where that one is. No, that wasn't it. So we'll get that one out of there. Maybe it's this one. No, I should have known that. Okay, 16 something. This one. Close enough. I'm going to move it down here. So I want it to bring it to my attention again. Okay, so to see what happens. It is a buy the dip thing, in my opinion. I don't know what the message said here. Let's see, buy the dip with a question mark. Or lower if materializes, if breaks down. So homework offline, like right now the market has closed and I have a couple of minutes before I do something else. So I just go in and I see if I can reset those alarms. So, and again, I am not trading the stock so yet, but if I see it fall to here, I might throw a credit put spread out there. If you know what that is, it's just a bullish position that doesn't need a rally to win. It just says it shouldn't fall any further than this. Like today, I put one on the small caps. They fell 4%, and I said, hey, I bet it's going to bounce from here, and I made a 50-50 bet basically, but I don't need a rally to win. I just need it not to fall anymore. That's it. And so these are the kind of bets I like. It's easier to find where stocks shouldn't go, or a ticker shouldn't go, than to find where it's going to go by a certain period of time. So somebody trading options will buy calls, but what if it lingers down here or falls? If you bought the calls, you're in trouble right away. But if you sell a put spread with some room to go, whenever possible, then you leave room for it to fall a little bit more. So that's the style of trading I prefer over buying calls and hoping. Besides, don't they say, quotation, they say that most options expire worthless. First of all, it's a complicated statistic because there are a lot of spreads in there, and I don't know how they consider that. Because if I buy or sell a spread and I win, I have a 50-50 win-loss. One leg loses, one leg wins, and I can still make money. So which side of the fence are they counting that one on? All right, for the statistic. But let's take it for that a lot of the hope buying strategy goes unrewarded. How's that? For options. Okay, so when you buy the stock, you have all the time in the world to sit it out. When you buy an option, you need something to happen in order for you to make money by X period of time, unless you're buying a spread that's already in the money. All right, that's enough of it. Should we look at something else? ACB? I haven't looked at ACB. Oof, no. Ouch. Okay, no. I'm not going to do that. Let's stick with CGC. All right, folks. Later. Bye.